So PayPal's Fastlane product to be offered on Adyen's platform. Ooh, PayPal expanded its alliance with payments platform Adyen, bringing Fastlane by PayPal accelerated checkout to Adyen's enterprise and marketplace customers in the United States, the company said on Tuesday. Fastlane allows customers to save their card and shipping information so they can more quickly check out with any participating merchant. The company's plan to extend the offering globally in the future. So this is likely going to go way beyond just the United States. Maybe the United States is just kind of like, let's get ready for the next steps, and then we're going to go global on this, right? And we know PayPal's big around the globe. PayPal's president and CEO Alex Chriss, who's doing a phenomenal job leading this company, who joined the company almost a year ago, is making technological enhancements to the payment technology of the company's products, combined with customer data, the core plan to accelerate growth. Adyen's customer base and relationships with enterprises make them an ideal first Fastlane payment processing partner, said Alex Chriss in a statement. This strategic partnership aligns with our goal to make PayPal available everywhere customers shop globally. In addition to increasing Fastlane by PayPal's reach, Adyen and PayPal will continue to explore solutions that enhance customers' journey and drive value for the enterprise value, right? And I mean, it's just when you go to check out at, let's say, Amazon, right? One of the beautiful things with checking out with Amazon, especially if you have Amazon Prime, is you can just buy now with one button, right? You don't need to go through all these different steps. You don't need to enter in your address every time. You don't need to enter in your credit card info. Amazon's got it all saved there. And boom, you order your thing and, it comes to your house. It's awesome. Well, the problem is when you go to buy things from non-Amazon, right? It's a pain in the butt. If you want to buy a new pair of Jordans on, Foot Locker, right? Without a product like PayPal, you have to go through all these different steps. You have to enter in your shipping address. You have to enter in this, that. And it's like that for everywhere. Go to Nordstrom.com or go to any basically website. It's a pain in the butt. But with PayPal's Fastlane, basically that makes the process insanely easy. Where all you have to do is once your payment information saved with PayPal, you can just click that button. It will scan your face, right? Your phone will scan your face. Boom. It's all entered in automatically. You don't have to worry about all that crap, which is a pain, right? And ultimately, it does actually negatively affect a company's numbers, which you got to understand why a business would want PayPal's Fastlane on their website. It's going to make for more sales. If you don't have it, there's going to be a certain amount of people you will lose in that process when they go to check out. Having something like PayPal, and it's just so easy like that, you're going to get more orders. Amazon understands that. If Amazon didn't understand that, they'd make you enter in your address and your credit card information every time. Amazon is very understanding of everything data-wise. I think they're probably the smartest company in the world when it comes to data, right? They understand, hey, the easier the process, if we can just make it where people just click one button and it's purchased, we're going to increase our sales dramatically, especially over the course of a year, and especially when you're compounded by how many customers they have, right? Let's say you're a website and you have 10,000 customers a year, which is not a big number. It's actually a small number, but let's just say 10,000. Well, if you can just make your checkout process a lot more streamlined, a lot simpler, a lot easier for customers to do, you could suddenly maybe have 11,000 customers instead of 10,000 or 12,000 customers instead of 10,000, right? It's a substantial difference in how much it can make up for your sales over time. So now in regards to PayPal, one of the other reasons I love this stock is also the valuation on this stock is so dang cheap. There's no reason PayPal, given the growth rates this company's been putting up, which have been very strong, there's no reason a company like this should be trading at these sorts of forward Ps and 2-year forward Ps. This stock, given the growth rates of this company, given the business model, how sticky the product is, how well the company's been run, especially over the past year, there's no reason why this company shouldn't be commanding something with a 20 or a 30 in front of it when it comes to a forward P with these growth rates. To trade down here, this is like super value stock territory for companies that grow revenue by 2, 3, 4%. And PayPal's growing revenues at 8% clip. And earnings per share at a much faster clip than 8%. So there's no reason the valuation should be down here. And that's going to have to come up. And that will come up. And that's just one of many reasons why PayPal stock is set up tremendously well. So great to see them executing on this. Alex Chriss is really focused on making PayPal's product a much stickier product, a much more integrated product with businesses, companies. His experience at Intuit, I think, is going to show to pay off handsomely well over time. and two, it's really tied in with small businesses, and I think he's going to really get PayPal tied in with small businesses and mid-size and large businesses, which is going to bode very well for PayPal's overall service, right? Because you got to remember, it's PayPal, it's Venmo, it's the Braintree side as well. And really, he's making a whole ecosystem around them in payment. So I love this overall. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People that are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it. Alrighty, next one up here. Josh Brown buys PayPal.
Since the August 5th lows. Healthcare, for example, is up 5%. Financials up 8.2%. I'm dropping below tech, obviously, which is the leader at 18%, but discretionary is up 11.3%. And Josh, on this.
And by the way, one last thing I'll cover here. Why do I use Fubo? I've used Fubo for probably 2 or 3 years now. I use Fubo personally, and I love it because of a few different things. They have usually the most sports channels you can imagine. I'm a huge college football fan, love college football, and I like to watch a ton of different games, and you got to understand college football is like a million different games on, right? And I like to be able to watch them all on my big 85-inch TV. So Fubo has ability where you can control whatever 4 games you want to put up there, you can put up there at a particular time. All on my big TV, right? I can control which one has the volume, which ones don't have the volume. It's a phenomenal experience, and that's just something you can't really get anywhere else. YouTube TV, from my understanding, has tried to experiment recently with kind of the 4 television screen offering, but then they've kind of screwed that up. I heard they were trying that last year with Sunday Ticket, right? But then they were choosing the games you had to watch. You couldn't just put whatever you wanted up there, which is not an ideal experience. Like you want to, like I said with the college football thing, there might be 10 college football games on at a time, but I want to watch the 4 that I want to watch. I don't want to watch like all these different ones. So anyways, I love Fubo. I used it for years, and you know, remain a user of it. And I hope as a consumer they continue to last and be here a long time, because I can tell you with YouTube TV, they're already so in with all these big media companies already, because they all advertise on each other's services all the time. Google advertise on theirs, then they advertise on theirs. I almost look at all that as kind of like a little collusion monopoly, and so I like having somebody big that could become big as far as a Fubo. You know, well over 1 million customers now. They should go to many millions over the coming years.
About the financials, you have JP Morgan 10 days up, right? Into Monday. The last 10-day streak was in July of 23. And you have a new stock on your list, something that you just bought. It's from the financial space, not a bank, but it is PayPal. Interesting. Why?
Yeah, so I bought in the pre-market on the news that Adyen is going to do a huge partnership with PayPal's Fastlane service. I like, as you know, when the fundamental news lines up with what we're seeing in the technicals. And PayPal hit our list at the end of last week of the best stocks in the market. Technically speaking, this stock is now above its prior 52-week high. And it's been a really long time since there's been anything positive to say about PayPal.
That's true.
And I have lost money in this name before, so think twice before you follow me into it. But they have a new CEO, and the new CEO is making incremental moves to improve the fundamentals. We've seen that in the last couple of quarters, and now we're starting to see big partnerships, and I think that's why the stock has been breaking out. The other thing to keep in mind is Apple.
I mean, really the only people that have made money in PayPal stock are people like myself that have been buying the stock heavily over the past year. Let's be very clear. If you had been buying PayPal stock before really the past year, you've lost money on that stock, right? 2022, 2021, 2020, 2019, 2018, like all those previous years, if you had been buying PayPal stock, you were a money loser. If you've been buying in the past year, let me know in the comments section if you're somebody that's been buying in the past year, you're likely profitable on PayPal. You're likely starting to make really good money on this stock. But so, I think that's just a little food for thought in regards to PayPal. As with all things in the stock market, the time you buy in is very important in this game, right? When the valuation says go, 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 you gotta go, go, go.
And Apple, by the way, is the bête noire of this story. Apple Pay has just absolutely trounced a lot of competitors on wallets and payments. Apple has just preemptively opened up its near-field communications, or NFC, system so that you can tap to pay, and this will include Venmo. So having Venmo as an option alongside Apple Pay when you push your phone up against a merchant screen is something new. The axe on this stock is Dan Dolev at Mizuho. He went positive on the stock.
And by the way, Apple didn't want to do that, but the government's starting to come down on Apple in several different ways for some of its monopolistic powers, right? And so some of these things are kind of being forced by the government that Apple has to do this. And these sorts of things definitely benefit PayPal.
After having been negative for a while, and the story here is now changing. PayPal is, I think PayPal has a very hot product in Fastlane, and if they can gain back some more ground on all these payment solutions, it really changes the fundamental outlook. So
I just had a vision of 170, 179. I like that.
Tactical breakout. I have a relatively tight stop. I don't trust this name, but I'm in it, and I love it when the fundamental story is improving as price action is confirming.
Kerry, this thing was in no man's land penalty box for a long time. You used to own it, didn't you?
As a matter of fact, I remember the last time that Josh bought it because we had sold it.
Yeah.
And I wish Josh luck. I mean, there's a lot that
Carrie.
right. But yeah, I do. I remember. I think if the market holds up, if retail holds up, it's good for PayPal. That's what it needs. It needs not just partnerships. It needs people to keep spending on their platform.
Yeah. So, Steph, all this news about Buffett selling Bank of America, selling the stake down. You've been a buyer, and you're a believer in financials. Do you think there's momentum in that sector?
Something I like is a lot of people have owned PayPal in the past, right? They've owned PayPal in the past, and they're keeping an eye on this story, right? Some of them kind of don't like it, like that lady, was talking there. PayPal can't, you got to understand, stocks are kind of like businesses. They can win back your business over time, all right? And so a lady like that is kind of like, wish you luck. Like, she's not that interested in buying PayPal. You could just tell she's not that interested, right? Let a few more quarters come in here and be really good numbers by Alex, Chris, and the team again, right? Let there start to be more hype and excitement about Fastlane and what that means for the company over this next 6-9 months. Let the stock go to 120 over the next 6-9 months. And you'll get ladies like that who run money who start saying, you know what? I used to be in this PayPal a while back, and this baby's starting to look good again. You can really change people's opinion. The better your stock price does, the better your business fundamentals do, right? And if you start to get hype around a product, all of a sudden you'll win back those people that used to be investing in your stock and seem like they're not interested. Good luck with that. I'm telling you guys, a lot can change in 6 or 9 months in the market. A lot can change. So that's kind of my opinion on that. And in terms of PayPal, am I worried recession? What if, people don't spend as much, on PayPal and those sorts of things? Like recessions, it doesn't scare me. Recessions come and go. The economy's, Steve Wynn put this best. It happens. You can't plan your business around just if there's no recession or there's a recession or something like that. You have to plan for all different types of scenarios. Those come and those go. Great economies come and they go. Bad economies come and they go, right? The economy is this moving thing that it's okay, sometimes it's getting better, and then it goes over the getting worse, better. That's just the economy, right? And so anyways, that doesn't scare me.
Eyes ahead?
First and foremost, Buffett is still a 12% owner of Bank of America, right? That's number one. Number two, earnings. To the point of view, you guys were talking about broadening out in the market. Financials grew earnings 17%. And by the way, discretionary, 31%. Healthcare, 17%. So there's no wonder why we are seeing this broadening out, right? I mean, that's the whole point, is that earnings are doing better than expected. I don't care, you talked about 5% revenue growth for the overall S&P, and that wasn't great, but I'll take 5%. That's about a 2.5% GDP world translation, and you're seeing margin expansion, which is why you got 10% earnings growth. So to me, that's the exciting part. That's why we're seeing the broadening out. Back to B of A, it's trading at 1.5 times tangible book. I think it can get to 1.9 times because net interest income is 50% of their revenues, and with interest rates coming down and them repricing their bond book, I think you're going to see something like $63 billion in net interest income by 2026, net interest margin expansion as well, fees coming back because the last decade they got hurt because they reduced their mortgage book. So that goes away, and they're seeing investment banking fees at the same time. Expenses are growing GDP kind of plus or minus 1%. I think you add it all up, it's a very cheap stock. So I like it. I'm overweight financials, and I've been very pleased with the rally in the sector.
So you've been pretty opportunistic when 2 weeks ago Monday when crowds were running for the hills with this panic attack over the economy and the unwind of the carry trade, you were a buyer. So now that we've had a huge snapback, how does that influence your decision making now?
Less buying. Less buying. We've had a heck of a run back, right? But I'm still a believer. So maybe September is volatile because it historically is. And if it is, I will be back buying because I had stocks like Eaton and Lam Research, Bank of America, Truist.
You hear her there? It's very important. You hear what she just said there. Oh, September, maybe it'd be very volatile. And that's what a lot of these Wall Streeters are expecting, right? A lot of these Wall Streeters are expecting volatile September. And a lot of people are expecting August to be that, right? And so far, other than that one dramatically down day, man, August has not been that bad. I can tell you it's been very good for me. And I'm sure it's been good for a lot of your guys' portfolios out there, right? August, September, usually known as bad months for the market. What happens if we just roll up and up and up over this couple months, right? October, people get scared in October. They get scared in October. Oh boy, it's spooky. That's always a talk in the market, right? October can be such a scary month. What happens if that's not? What if we roll August, September, October? I'm just interested to see where these Wall Streeters go if that happens, because I don't think anybody's anticipating. Everybody's expecting like this big down move in the market, right? September, October. And what happens if that doesn't happen? Then what do you do going into November, December? Especially if you're underperforming the indexes that your fund is against or your ETF or whatever, right? Let's say you're underperforming the S&P if that's your benchmark, right? What do you do going into November, December if we rally if we have an overall rally? Not every day is going to be a rally, right? But what if you had an overall rally? August, September, October, right into rate cuts. What do you do then, right? If you're underperforming the market, then you just got to go max risk on November, December. Maybe that's when the market drops down, right? I don't know, man. It's a weird situation. Not enough people are, even the bulls are talking like, well, maybe September I'll buy some stocks. Maybe stocks will go down then. That's kind of what she's alluding to, even though she's a bull in the market. I don't know, man. It freaks me out when bulls are kind of counting on the market to go down to go buy more stocks, because then I'm like, is that really going to happen? If the bulls are scared? Or I don't know, man.
So many names came off double digits. I mean, Lam Research was down 50, because you own it, down 15% in 2 days on no news after they beat and raised.
That might not have been a diss, but damn, that was pretty... That was brutal. Like, she probably, to be fair to her, I don't think she meant it like that, but that was fucking brutal. That was brutal.
Like Eaton and Lam Research, Bank of America, Truist, CrowdStrike, so many names came off double digits. I mean, Lam Research was down 50, because you own it, down 50. That was brutal. Are you freaking kidding me?
I don't know who she was talking to, her or him. Both of them are like, F you, lady. Like I said, I don't think she meant it like that, but that was just, that was brutal.
In 2 days on no news after they beat and raised. So I was opportunistic because I didn't think it was a credit problem. Obviously, carry unwind, the yen carry unwind was a big deal, and it was surprising, the moves. But I think that gave you the opportunity because I go back to the economy, and the data has been pretty good. ISM services were better than expected. New orders, employment, initial claims, retail sales. I mean, we're not falling apart. And so I go back to your comments about your clients being worried. I think they're worried because interest rates are still so high, and that does it last? Is it going to be a soft landing? For now, it is a soft landing supported by earnings.
Okay.